The US Federal Reserve this morning made it very clear that its programs for coronavirus are here to stay. So why is everyone worried about inflation?
Good morning, Pete. Actually, I think it's Happy New Year. It's the first time I've actually spoken to you this year. So
Happy New Year to you too, Evan.
It's look, the reason inflation is coming about is what we're starting to see, and it's happened at the start of this year with regards to movements in the US markets, is that forward expectation of inflation in the US is now at about 2.1%. Now, why that matters is that the US Federal Reserve's mandate is to try and keep basically price inflation around 2%. So it's just gone slightly above that in what we expect to happen in 2021. And that therefore means that the possibility of starting to taper, so actually winding back their quantitative easing program of 120 billion US dollars a month. It currently has seen about 3 trillion US dollars added to their balance sheet since the coronavirus crisis started. It means it sits at about 7.5 trillion US dollars. What we were waiting to see is if that program was actually going to start winding off, as I said, because inflation's coming. Now, what's been happening in the last 2 weeks from the Federal Reserve is that they've come out very, very strongly and said, we want to average, not get to, average 2% of inflation over a period of about 12 months. And they are a long, long way away from that. But the market is trying to sort of forego the idea, or sorry, program in the idea that it's coming, and therefore that rate rises and a tapering program is there. So they were very, very strong on that idea that it won't happen in 2021, and trying to basically alleviate the issues the market's been trying to put into itself over the last 2 weeks, that inflation is coming, therefore rate rises are coming, therefore all of this accommodative policy, that almost inverted commas, the gravy train, will start to come to an end. And why it matters is that you go back to 2013, when then Ben Bernanke, chair of the board, sort of had a Freudian slip in saying that they were thinking about winding it back, and the market had what was referred to now as the taper tantrum, where we got a lot of volatility, things that are interest rate exposed, property, equities, had a very, very tumultuous period. So all of that is why at the moment everybody's looking at inflation, and why the Fed is trying to tell you, no, don't worry about inflation. We need to get out of the coronavirus problem first before we worry about that.
Could the same thing happen here?
Yes, it could, and it probably is thought about. Yesterday we got our inflation numbers. They were okay. What we need to highlight, though, is that the things that are driving inflation, tobacco jumped 10.5%. Things also like urban transport fares, so that's going on your trains to your Sydney CBD or your Melbourne CBD. All of that was really, really strong, along with childcare, which is now back at pre-COVID levels because the government's no longer doing their subsidy programs. What we're probably therefore at with inflation is we're back to where we started. The thing about that is that inflation needs to be between 2 and 3%. As of yesterday, it's at 1.2% to see rate rises. So again, people are asking that question about inflation in Australia, and that we're starting to see pretty rapid inflation coming. It's a long way away from where we need it to be, and there needs to be sustained, almost a pulse going there. So the RBA too will say very clearly, inflation's a long way away, and we're not raising rates anytime soon either.
Okay. Evan, I've got to ask about GameStop. So I looked on, it was blowing up on Twitter yesterday. I'm like, what's this trending? GameStop. Why is GameStop trending? And looking at the graphs, and in the last month, and Tom Petrovsky spoke about this earlier in the program, it's gone up 1,700% in the last month. Yep. It's gone from single figures up to a close of $316.46. It's up $168 in just 24 hours. Can you tell me what's going on here?
Okay. Yeah, I can. It's a little bit complex. And also it shows you very clearly that people like Elon Musk also probably need to start being held account for some of the things they do. This all started around about January 7th, January 8th, when a Reddit group called the Wall Street Bets put out an idea to basically pump this up. Now, it gets complex because what they were actually telling their traders to do, and it is very, very small, these new free trade platforms over there, you probably have seen some of them, things like Robinhood is the one example of it.
Yeah.
They were basically saying that you should get on GameBet or GameStop with options. Now, what they mean by that is that you actually buy an option to buy, GameStop in the future. What was then happening from that is that the underlying broker was hedging that by having to buy the physical share. And it's just ramped up from there as an Elon Musk has come on and actually promoted that Wall Street Bets Reddit train. He's then also jumped on board, and it's a perpetuating cycle. And it's now got out of control, because if you're honest and have a look at what actually GameStop does, it does almost nothing. It's a chain. Yeah. It's a fairly meddling business.
This is FOMO, isn't it? This is FOMO.
Yeah. It's more than that. This is different again. This is actually also getting personal, because the other side of this equation is a company called Melbourne Capital, who were shorting this company on the back of it. And it's a company that's actually targeted Elon Musk's Tesla in the past. So it all comes back to a personal scenario as well. Elon Musk using his muscle that he has to do it. So it's a perpetuating thing. It is FOMO, but it's more than that as well. It shows very clearly that if you do have these big billionaire players that all of a sudden want to sort of do something and move a market, particularly a very, very small company, which as of yesterday, and as he said, now, $321, that means it's probably around about, what, 14 billion US dollars. It's not that. It's not worth that in terms of what it does.
Yeah.
It's a market that's got out of control by a system that doesn't normally happen or hasn't ever happened in the past, which is social media and using social media in an adverse way.